Alright, what's up, Discord? Alright, this is gonna be an exclusive video for you guys. We're gonna be talking about GJ, the little trade that we had right here. I mean, it ended up going back down, but I want to talk about why we was even looking to take a trade here, and just what was the thought process behind it, and why was the trade, and like why I looked for a trade here instead of like down here or anywhere else. All right. I know this ended up coming back down. This is the consequence of order flow. I said it before, order flow can change on a dime. So all this right here is order flow until we get to this area right here, which is a supply area that we're waiting for the market to get into. The main point of this trade was for us to buy here and get into the supply area. This was my main target, but I do expect that the market will continue back to the upside. Right now we're just slowing down. All right, so I do expect this to come down, and then we'll get that 3-drive move like we talk about. Maybe distribute right here, get that 3-drive move, get this entry. Even if you don't catch that entry, maybe the market will come back up, and then we'll get that distro to the downside. Maybe. All right, in a perfect world, right? In a perfect world, we'll get that, but we don't know. Right now all I can see is that the market is beginning to weaken. All right, this buying pressure, the buyers are beginning to slow down, and the sellers are beginning to come in the market because we're getting bigger pushes to the downside. Okay, so that's all I can see right now. I can't put a range in this yet. I'm watching this some more to see when I could start drawing out my range, but we'll just continue to watch it. But right now, let's focus on this little trade right here. A little a day trade. A little in the session type trade. Trades like this can go a long way, man. Trades like this can go a long way, even if it's for a small percentage. 12%. If you get 12% in one day, brother, you should be good with that, bro. 12% in one day. You look for another day, you make another 12%. You make another 12% another day. That's 36% in the week already. Okay. Don't go for these huge percentages every trade. It's not guaranteed you'll get it every trade. All right. You'll have trades that go for them huge percentages, but if you can take the little 10%, 15%, 20%, bro, that's good, bro. That's good. That's where that consistency comes in, man. All right, so let's go over our thought process behind this. Okay, so I know I dropped a market outlook this week when I was talking about this area right here. All right, this area was considered my slingshot. All right, this whole area was considered my slingshot area, where I knew this area right here was a redistribution. So I knew that this area was a point of supply, if I would say. Okay, this area was a point of supply. All right, why was this area a point of supply? Because we reacted inside of a demand, well, throughout all here. Right, so let's explain this. I've said this before. All right, when you have a demand area, right, and the market reacts inside the demand area, it ends up failing. That's where you have demand, right? This demand turning into supply. So because we reacted off of demand, and we reacted off of it, we got a buy, we got a small buy off of it, but this small buy ended up not holding. So that means that sellers were more in control than the buyers. So we know that this area right here is a level of supply. All right, that's all you have to think about it as. When you see a failed area, right, because you see this sell to buy here, and you're okay, I know this area right here is a level of demand because it reacted inside of an area of demand. All right, so you were expecting some type of move from here, right? When you get that move and you see that it breaks, this area breaks, you know that this right here becomes our first area of supply. It's just the same thing with the slingshot candle. This right here is our slingshot candle because it's not the structure of the move, but it's the area that caused the break, right? Especially after we reacted inside of a demand and the demand failed. So now this becomes supply. It's basically demand changing into supply. And think about that, because we're going to get into that. That's why I looked right here. All right. So we know that this was a slingshot candle. So as the market was coming up here, we would have looked for what? Sales right here, right? All right. Keep that thought. Guess what happened? Let's go to the 30-minute. We know this right here, right? This candle right here, this big selling candle, right? This candle is what reacted inside of this supply, quote unquote supply area, right? What happened after we got to this sell? We continued to the upside and we broke it. So now let's reverse this, right? This is a supply area right? We were supposed to sell here, but we ended up continuing to the upside. So what does this become? Our slingshot, right? Because this right here was supposed to continue to the downside. This right here is where, you know, sellers tried to sell here, because that's where we got this big move to the downside. Sellers tried to sell here, but ended up failing, and the market continued up. So guess what? Like, this is supply now turning into demand. Okay, just keep that simple thought. All right, because this is supply turning into demand, because it's the same thing as this that I was explaining, but reversed. All right, now we have a supply zone, and then we have a reaction inside of the supply zone, but it didn't hold. So now we know this is our demand. The same thing with this. We have a demand, and then we have a reaction inside demand, but it didn't hold. So now this becomes supply, and then this becomes demand. Cool. That's how I got this zone, okay? That's just how I got this zone. It's that simple. All right, we can delete all that. So now let's focus into here. Notice that I have this as a as yellow. You remember what I said about my yellows? My yellows are, you know, slingshots. Slingshots. All these are slingshots. So yellows are slingshots. They're like decisional points of interest. You know, I'm not looking to set a limit here, right? Because there's the option of the market just continuing down here for no reason. And this is order flow. So I'm not gonna set a limit on order flow. All right. Just know that. I set a limit here if I can. You know, I'll look into this to see if I can set a limit. But I'd rather set a limit here than set a limit here. That's what I'd say. Okay. So now we have our POI, we have our slingshot. What do we do when what do we look for? Accumulation, right? If we're expecting the market to buy here, what are we going to look for? Accumulation. It gets simple as that. Now you just look for your confirmation entry, right? When the market gets inside of your point of interest, look for confirmation. Look for the market to tell you that it's going to buy, right? So let's zoom into here. Actually, let's I'm gonna take it back with you guys, and let's just mark it out together as the market comes down, right? Let's go down to the 5 minutes, see what's going on. So now the market is getting inside of our demand, you know, quote unquote, I say demand. Let's go. Yeah, let's keep the 5 minute. Let's watch the market, right? All right, boom. What do we see here? We have a huge sell-off. Now the market is beginning to range. Now the market has caught my attention, right? We have a huge sell-off, right, into our point of demand, but now the market is beginning to range inside of our point of demand, creating what? If we go down to the lower time frame, go down to the. Don't get confused in all this. That's why I tried to stay on the 5 minute, because it can get really confusing. All right, always try to look at. I'm gonna stick on this time frame. Always try to look at the overall picture. All right, because if you was just watching this from the 1 minute, you would have got confused in all of this, right? But if you go on the 5 minute, this looks simple. It's like a simple schematic. All right. So what we have our first instance right here. We have our selling climax, right? This is the beginning of our range. We have this area right here where the market just stopped selling, and then after that we started our range. So already we can already mark out our range. We have our selling climax, and then we have our automatic rally, right? And then once you get your selling climax, automatic rally, just mark out your range. Mark out your range, okay? Now just watch the market move inside this range. Simple as that. All right, we have our secondary test here. Secondary test. This is basically the test of this selling climax. Right here, we have our STMB, which took out our selling climax. All right, let's keep watching. All right, boom. That's all we needed. That's all we needed. Now we have our spring. We have our spring, right? We have our spring. And we know this is a spring because we traded out of the trading range. Remember, the selling climax of the AR is your trading range. we broke this high. We broke this high, and we made a sign of strength. Now what do we look for? Now we can set a limit here. Now we're just looking for where to set the limit. All right. Now we can zoom in. And I was going down to the 3-minute and lower time frame so you can see the schematic better. Now you can see it better. Selling climax, automatic rally, secondary test here, STMB here. Right? And now we have what? Our spring. And we have just created a sign of strength, confirming our spring. Now that we created this sign of strength, we can set a limit down here. All right. So where I was looking for a limit, right? I was looking for a limit right here. And let me go through the thought process of why I was looking at a limit right there. If you go to the 2-minute, right, you have this candle here that was never touched. Okay. So rather than me setting a limit here, knowing that there is an imbalance down here, right? I'd rather set a limit down here than try to set a limit right here because I know there's an imbalance down here. All right. I'd rather miss the trade setting a limit here than get stopped out setting a limit there. All right. That's the main reason I set a limit down here. And I did it at the 480 because once I went to the 1-minute time frame, this small area right here was the little gap, right? This small area right here was the little gap. Okay. That's why I went down to the smaller time frame. I seen this little gap right here and this little imbalance. So I know if the market was willing to come down here, it would react here and then continue. There's no point of it going lower because there's no more imbalance lower. All right. And that was where my limit was. Um, 6.5 pip stop loss, you could say. That's what my limit was, and I was targeting first this high, and then our main target was the supply area here for a 20 RR. Okay? Now let's just watch the market, right? I'm going to speed it up a little bit. Just watch the market. Tap right there. Look at that. Would you look at that right? Sniper entry, bro. Sniper entry. All right. And one thing else we got to look at, look how the market came into our area, right? It started doing the same thing that we did again. Market started slowing down. Boom. You could have caught another entry here if you really wanted to, right? Because this is just a creek. More to the upside. This is one of our entries. So even if you did not set a limit down here, you could have still caught this entry here, trading this small accumulation that happened here, okay? And then your best entry would have been right here at this fill of imbalance, right here. And you would have gotten probably a tighter stop loss, okay? I just want to get into that. Always, when you're looking to buy the market somewhere, always look for the market to slow down, all right? Look for that momentum, all right? You see we have this big selling pressure, but then the market just starts slowing down. We start seeing these bigger retracements. That's good. That means buyers are beginning to get into the market. When you see these bigger retracements back to the upside, that's the good thing, right? The markets are the buyers are getting into the market. Okay, that's what we want to see. We want to see buyers get into the market when we're trying to buy the market. It makes a lot of sense, don't it? Okay. So I'm gonna delete all this and then we're just gonna play it out and just gonna play all this, and I'll go back to like the 10-minute or something. The market even gave a little second entry in here, but we don't have to go over all that. Market flew to the upside. Gave you a 13 RR. I actually closed up here. It was at the end of the day, and I seen the market was slowing down. Right? I think it went higher for a little bit. Let's see. Okay. Okay, max that it gave you was 15 R, 100, 15 R, 100%, right? 100 pips. I'm sorry, 100 pips. I actually closed over here. I seen the market was slowing down. The main thing that I would have did here was partial out. It was a Monday, so I didn't care. I was like, okay, we have the whole week to you do to catch this, so it is what it is. So I closed out here taking, I think it was like a 12-1, just the 12 RR, right? So that's where I closed out at. You could have, the best way you could have played this was you could have just took 50%, take 50% partials and just let it run. You would have ended up gotten stopped out, break even. I mean, not stopped out, break even, but you would have at least secured something, right? If you wanted to hold this. So that's basically the trade right there. Like I said, order flow can change on a dime. So I mean, this is not structured. This is just order flow that we're trading here. So I mean, it happens, okay? But this was the trade overview of this GJ. All right, guys.